Good evening. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I had to run out of my office with my camera crew, get on my boat because I have a work event at home, but I wanted to make sure I gave you the recap. You know what? I'm kidding. But this is a picture from my boat ride that I take every day that I do in my routine. And a lot of people like, Red Dog, how are you so prepared every single day? I'm like, because you know why? I'm up at 4:45 and I'm on a 6 o'clock boat. And it's a great boat ride. I'll tell you, I put the Twitter pictures on a lot when I see a great sunrise, or on my way home when I see some kind of cool looking sunset. And I feel like this picture is kind of I can't say the right word because I'm not that smart, which people know, but it's kind of like you have your yin and yang. You have on this side it's like the bright side, on that side it's the dark side, and it's like a storm brewing. And if you talk to all the shorts out there, there's a storm brewing. Right? They're saying this is the same environment as we saw back in 2007, which I really don't agree with. They're saying we have to be close to a top, that we're getting these sell signals everywhere, and they've been probably saying that for about 200 some handles, and they put some traders out of business, but we try not to do that. What we try and do is we try and look at the brighter side. Is that the side? Yeah. Just had to cheat a little bit and look over the corner of my eye. Where you look for constructive looking patterns that can trend, that are above their 8 and 21 day moving averages, that have tight setups where you could add tier sizes for breakouts, and then every now and then you get an extension with an RDR. You could do a cute short, but lately, obviously, if you stay too long, it hurts you a bit. So you go real quickly to the spiders. Let's check out what's cooking here. And this is your S&P. You have that fast and furious V bottom, which at this point you're sick of hearing, and then you had your gap up and go for power, which pretty much put to rest all those dead cat bounce theory talks that everyone was talking about, especially once we got over the 200-day. And then from there, this is where we are. So the question is, this little doji top, which is what today was, it looked like it was going to be a little worse, but you had that news on Halliburton, which I'll get into. Is it a signal that we're going to rest a little bit longer and go sideways and hover up here, kind of like what happened here, where we had to rest a little bit after a big move? Or does it mean we open up below it, get close below today's low? Pretty much, I guess it's not even. You can't even draw that. You get below yesterday's low, below the 8-day, and retrace a bit. There are so many guys out there that are hoping that's the case. Hope is not a way to trade, and although the pain trade is a situation that occurs when people are trapped in short. And I never want to see people trapped in short because, I've been that way for a half a day and I've been miserable at the world, losing money that way. So I can't imagine guys who have been doing it for 2 weeks, and they have to perform. So now they're short, losing money, and everyone's going home making money high-fiving, and the public's like, oh, look, market's hit a new high, and they go home like, the wife's like, oh, I saw the market up 200 points. How'd you do today? Not too good, honey. Well, anyway, again, it's not funny. But when the tape is conducive to holding shorts for more than a half a day, as traders, we'll do it. There are spots that are a little weaker than stronger, and spots to trim and trail, or spots to even add to shorts at certain points when the time is right. But you have to really be very specific on when those are. And the same way you have to be specific if you're adding to a long, because momentum has been hard to find here and there. So let's go through another, a few more sectors, see what's cooking. You got the Qs. Everyone was thinking this is a top, and all you had here was a day where we closed off the highs, still trending real well. You know what, guys? Believe it or not, I'm short the IWM, and I'm scared. I'm not scared, but I'm just saying I don't like to be short. Here was your red dog reversal. Here's when it traded above a level, took back the 200-day. Nice flag pattern. Talked about this coming into the beginning of the week, gave you a nice trade, and then today, a small red dog reversal where it opened up above a prior high. I got short around 18-ish. I missed that 118.08, and then covered, and then I got reshort at the end of the day saying it really didn't bounce, and if anything was to trade a little bit lower, perhaps this kind. I guess you can't even really draw a trend line like this, but if I do it with my fake ruler here, chances are, you could see a little bit more downside. But we'll see. Again, one day. Look what this sector has done. It's still above this trend line right here. It's still above the 8 and 21. And strong sectors still break the 8-day moving average and hold the 21-day, and that could be healthy. it's been healthy. So anyway, that's the Russell. As far as, let's see what the banks did today. The banks are a little weaker. Nothing so horrendous, but not a lot of momentum, and still holding the 8-day. See if that continues. RTHs, which is retail, which has been friggin' absolutely in fuego. Wow, look at that, guys. I'm so sorry that I have not been involved in this group and bringing it to you, and because it just broke out and it hasn't looked back and it's extended. Hopefully you trim and trailed. I think the reason being is because Walmart was my stock play of the year. Actually a few years ago. You go to the weekly chart. I'll show you when it was my stock pick of the year on CNBC way back when. That was here, okay, when it broke this descending channel, okay, and then I guess it just did it again. Look at that. Boom. Consolidated, broke out. Congratulations if you stayed in this. A lot of people took me down memory lane today. The year before that was Home Depot. Let me show you a similar pattern. The reason why I liked Home Depot, that's when it actually cleared here. Or actually, I think this is even later. I think, I had a Home Depot when it cleared here. But anyway, I haven't been that active in retail, and it is what it is. What are you going to do? But again, you want to talk about a bull market somewhere. There's been a bull market in retail, as everyone says. The consumer is dead, and the economy is slowing. It doesn't look like it's slowing here in retail. But on the weaker side, on this side, right? Is that this side over there? In the darkness, you have had oil. Oil has been weaker. Everyone's been saying we're going to have Armageddon if oil closes below 80. Well, oil was below 75.80, the last little pivot. And I actually came in short the XLEs, and I covered a little early because, again, I don't feel comfortable shorting as much as I do long, but I can make tactical money that way. Every time I short, I feel like I stole something because at some point it probably goes up again, and I'd like to be involved on that side. But anyway, we talked about the USOs today. We talked about the trend. We've talked about levels. The USOs and oil have been in a bad trend, a negative trend all year. Okay, right here was when it broke that level. Right here is when it broke the 200-day. Here is when it broke another key support. Here it broke this area, rallied back to it earlier in the week, and then now it's all the way below another key pivot. Okay, so if you want to short oil and short something weak versus looking just to short strength because things are going higher, this was your spot, and you actually could have shorted it. It opened above the prior pivot. You could have got short there. So anyway, it's at new lows. We'll see what happens next. On Fox Business, I talked about 68 to 72 as a spot to probably look to be maybe a longer-term buyer. We'll see if we get there. Later in the day, you had a little bit of a bounce, okay, in this sector. Some news with Halliburton and Baker Hughes. This sort of broke this trend line and came back above it to keep everyone guessing. This little topping tail is what got me short, but again, I like to cover into some weakness. I wasn't thinking it was just going to fall apart and cascade down. OAHs did the same thing. Who knows what this really news amounts to, but overnight I would say if you were short that group, hopefully you covered or you covered some. Here's when it broke its accelerated trend. Then it started to weaken, getting below the moving averages, broke the 200-day, and it's been weaker ever since. Looked like it was going to fall off the face of the you-know-what today, and then that news came out, and it's still in this lower channel, still bearish, still below the moving averages. You still have to be tactical in a situation like that. Halliburton, look at this wide range bar. I actually, I tend not to play news. I tend not to go after things I'm not that comfortable with, but when I heard the BHI news and I knew how oversold this group was, Halliburton was down $1, bought it, virtual trade floor. That's the luxury of being on the virtual trading floor. You see when I buy things, because it's quick. I only have 2 thumbs, 1, 2. So, although I do tweet a lot, and sometimes I try and keep everyone up as much as I can in the first half an hour, I'm a trader, and I'm trading, and I'm talking on the microphone. So on the virtual trade floor, you get to hear me talk, you get to see the positions, and I can't always tweet about it. That's why I write the Red Laurel Access note, because I have a page of 30 different symbols with if-then scenarios. If this happens, do this. If that happens, do that. And then on the virtual trade floor, they get to see me execute on my thesis. I can't always type about what I'm in, what I'm out, what tier size I am. That's for the guys on the virtual trading floor in the community. But I do as much as I possibly can to keep everyone up. So this way also I don't hear the noise from the you-know-who's out there. But again, Twitter comes with a money-back guarantee, especially if that's all you use is Twitter. It's free, isn't it? You know, we do what we can, and we try and keep the community close and keep people safe. And that's why I fight the influencers out there that I think have opinions and blow up traders and talk bad about moving averages or momentum names or trends. You know, because I'm a big advocate of using all of those to keep you guys, you know, safe and sound. So not like I feel all Spider-Man and all, where, you know, special powers comes with special responsibilities, because I don't have any of those. All I have is a game plan and a set of rules that I've been trying to teach everyone else out there as well. One of those rules is the red dog reversal, right? I talk about the pattern when you hit a bottom, when maybe you hit a top, and a stock that I've been talking about a lot is BABA. You know, last day or so I've been out of it. You know, and then finally today, you know, it gave you a true sell signal. Okay, first of all, you know, I put the BABA to butt call on down here, probably somewhere around this space. You know, even well before this, because I remember this day happened where I tried to buy it, it wasn't ready, it got stopped out. But then the old red dog would have said, okay, I'm not going to look at it again. But the new red dog said, I don't care what happened here, I'm going to try and get back involved again, especially if it closes above the 90, which was here. Had a nice swing trade, got out, took options into earnings, and then started to ride it again after earnings from here to probably about there. So I missed this move, and I've been kind of sidestepped here because it got a little bit out of my, my range. So what happens is, why a red dog reversal works is because you have 1945. If someone started shorting here, which a lot of people started saying to short there, or shorted here, and didn't use this as a stop, because that should have been your stop. If you were short during this move, once it cleared this prior pivot, that should have been your out. Or even shorted here on the doji, saying, oh, maybe it clears below this, and didn't use this as your stop, you've been in quite a bit of pain. So typically what happens is, you know, you get a squeeze above 1945, and who knows? You know, you had wirehouses talking about 130, 135, 140 in price targets. And so when you trade through a prior high, if you're short, you're like, oh my God, that's the last point of reference I have, I better cover. And then if you've been waiting to buy it and you're like, I can't wait anymore, if you sold it a little early and said, let me play it to see if it can go above 120 to 125, that's your pivot. So here is your pivot. What happened? Traded above it, squeezed some shorts, had some chasers come in and failed. You want to look at it on the 5-minute, you can see how pronounced it was. So on the 5-minute, you know, just to show you how that works, it's all, you know, a red dog reversal truly is, it's an emotional scenario, okay? So the reason why it's emotional is because you have a fight between guys who have been short for a long period of time that are on edge that have to cover, and guys that either have been waiting to buy or sold early because they bought saying, oh, I got to get in if it goes again. And that's why that 119.45 is the pivot. So when it trades above it, shorts cover, chasers come in, but then when it trades back below it, anyone who bought late say, oh my God, what the hell am I going to do? I got to get out. And then anyone who shorted 10 points below and covered said, oh, I just covered the top. What do I do here now? So they reshort it, so that quick move happens fast. So you go back to the chart here of BABA. So, you know, it opened up, traded through this 1945, made a quick peak, came below it, and then this was a nice short below 1945. And then what happened? Pulled in real quick. Did it reclaim this? Did it continue up? No. It held lower. So this right here is when I got involved. Okay, I did not short when it came back below it. I wasn't really even trading it because I had a lot of other things going on. But right here I said, you know what? Let me short versus the high here and figure out what's next. And then it broke below, you know, this area. It broke below. It went negative. And I think I covered somewhere, you know, somewhere around here. I don't remember exactly where. So I made like a nice trade in BABA short. You know, not fighting it, calculated versus the highs. Some guys on the VTF were like, why are you covering, Red Dog? Trim and trail, like you always say. I was like, you know what, I probably should, but I didn't. So you could have shorted this 1945 and never been in any pain and made for yourself almost $5 on a 55-cent risk. Not playing the cost average game, the guessing game, the, you know, I just think blah, blah, blah. No, a Red Dog reversal, chasing move. You know, I think, you know, Jeff Cooper calls it the Gilligan. I was listening to him last night. Very good guy, knows his stuff. And then it came below, stayed below, and then you had this as an H pattern, right? Rally up, took this out, and boom, boom. Rallied up again, and then closed lower. So now the question is, what do you do? At this point, look where it came from. You don't truly know. All we know right now is that you should not be long this thing. Some guys probably went out net short because if you go to volume here, you know, you go basic studies, volume, okay, and actually not that hell of a lot of volume, but it looks vulnerable from where it came from. So here is what we know. We know that you have 113.69. If we were trading, we break below 113.69, and if you were long this thing and you bought it here or you bought it here, you'd say, wow, I just paid up for it. It's breaking this level. And, who knows? It just came from all the way sub 90. It could pull in. So the only other point of reference we have right underneath it is the 8-day. And what has the 8-day been? The 8-day has been a guide for the majority of this move ever since it broke, above this spot here around 90. So this is where you want to watch it. And sometimes it breaks below, comes back above it because of the algos and the computers that know people are watching it. Last time it was perfect right into it. So we'll see. Does it break this 3-day pivot? How does it handle the 8-day? If for some reason it does not hold the 8-day, what does that mean? Does it mean it's over? Does it mean it's coming back to here? No, it means just the trade changed. It's not as fast. It's not as furious. Dip buyers aren't coming in as quick. So then maybe your next level would be here. Okay. And then the 21-day, which still is deemed a very strong stock, comes in there. So you have your 3-day support. You have your 8-day. You have the trend line, which is somewhere in there too, and we'll figure it out. But for now, that scenario that was pent up where, you heard about it. The key indicator was you heard about it 100 times into that, sales day or whatever the hell they call it. But anyway, we'll see what's next. The next situation I've been focusing on a lot is Apple. Apple, on Monday at 3:30, I'm like, I'm in tier 2. Everyone's red dog, red dog. You said at 75, iPhone to hit 100. How could you be going tier 2 up here around 109.5? What's the story? So the story was that let's remove the volume. It was flagging, looking good, and it made sense to do so. So here was that big gap up, for the 7-for-1 stock split when people were bashing the financial engineering, and I was like, wow, I love it. And anyway, you had your trend. You did have an overshoot to the downside during that pull-in. Came back up, gap up after earnings. That was the last time I got involved for a swing. And then I sold somewhere around here, and I missed this last little move. And then I was waiting very patiently with a lot of guys on the site. A lot of my guys love trading Apple. So on this day, when it looked as if it was going to continue above here, I said, I am in tier 2. It held the 8-day. It's been above the 8-day for this entire trend. Finally let it catch up after 6 days of consolidation, digesting. People are like, oh, it's starting to fail. It's starting to roll over. I'm like, no, it's digesting a big move. So anyway, that's where it closed. The next day, it opened lower. Okay, you could have actually bought it lower and added through the prior high, added through here, and had made a nice trade. My problem is, I go from tier 2 here to like tier 1 and change, on this day, whereas on this day I should be going into tier 3, and then on selling it on day 3, and now it probably rests, But all in all, it did hit as high as 113.45, so I did get a lot of tweets saying thank you, which I appreciate because I put myself out there all the time, and there's enough shorts out there, enough bashers out there that if you do happen to like, what you hear and you make money from it and profit from it, I don't mind hearing a thank you every now and then. I'll try and respond the best I can. My nickname is Red Dog, I'm not a cat. I'm not like, moody in the corner, I like to, that's what a dog does, right? You want to, get a little pep behind the ears or a biscuit or something like that. But we are Ferry. You can't give me a biscuit. $100 gifts. I'm kidding. That'll never happen. Anyway, I'm just trying to be a little funny. It's Thursday, and hopefully happy hour happens soon. But that was another nice trade. That one we actually milked really well, and guys on the site got very excited. And I told them, like, guys, don't get excited. The trading gods are going to hear you. What does that mean? That means if you get too excited, you let your highs get too high. Same way you don't want to get your lows too low, you're not going to do what you did in order to get yourself to those highs, which is discipline, the plan, and the tier system. So don't get ahead of yourself. Do not be boisterous. Do not, tell the world and go home. And especially don't tell your wife how much money you made. She'll spend it. Or tell your husband. I'm kidding. You obviously open relationships. Everyone knows everything. But it was another good trade. But then there was like another scenario that, I would just want to go over because some people got hurt there today. And I talked about it. And I talked about what would show you commitment to an igniting bar. Think to yourself, what does Red Dog say, even though he's on the boat right now listening to his headsets, would show commitment to a move, on a very potent upside day? Think about it. Retracement rules, Fibonacci rules. If the move is valid and true, typically you don't give back a third of it. Okay, sometimes you give back a half, half, Eddie. You ever see that Eddie Murphy with Fufu? But anyway, yeah. But you give back a half. That invalidates the whole move. That means you change. It's not pent up. It's not that strong, and you got to get away. So Twitter, which ignited yesterday, okay, which I don't want to show you this bar yet, gave you a really nice trade. Okay, here was a small reversal. This was your analyst day, closed well. You had no idea what was going to happen. Actually, if you took it home long, you had some follow through. What did it do? It hit the 21-day moving average. Okay, and then I went over retracement rules. Okay, in yesterday's recap, if you actually watched the right recap, I have to apologize. Freddie, raise your hand in the back. He put down the wrong link, and I gave him 30 lashes today. So you won't see him riding the ferry. He's got to take something else because he can't sit down. I'm kidding. Oops, hold on. Fibonacci retracements. For now, I'll do 30 lashes. We'll get in trouble. Okay, boom. So before I do that, let's go like this. Fibonacci's. Okay. So what do Fibonacci's mean? They measure retracement rules. So basically, you go like this, and here was your, okay. I didn't draw them in right. Okay, let's do it again. Fibonacci retracement rules. What did I say before? Fibonacci. Okay, so there you go. So the 25% retracement of just from here to here, okay, which I didn't even do. I said, let's do it from where it opens, would have given you, a pullback to the prior high, which if it was really strong, it should never have gone below. Okay, so that right there, if I was long it overnight, which I wasn't, first of all, my rule is if I'm long, just say 3,000 Twitter overnight into 60 cent, 70 cent gap up, I'm at a half. And then I wait to see. And then if it starts to break below a prior high and doesn't show commitment to that second day, I'm also out. And then if it goes red, I'm out. So then your 38% retracement is right here. So right here, if this stock was going to be real and it was going to just say flag for a potential move into the gap, it should never have broken 42 today. Okay, and that's giving it a lot of room, let alone closing where it did on the dead lows, giving you this nasty, nasty red bar. And although it sucks when you lose money, you better learn from it if you lost a lot. And if you just, bought the whole way down, don't know what to tell you. Okay, and I don't know what's going to happen tomorrow. I don't know if an analyst is going to come out and upgrade it and, say that the downgrade in their debt is baloney or whatever they're going to say. But this right here is not something to be long. And if you short it, you must really have a short thesis against Twitter, and who knows, it could work. But anyway, that could have got you out of trouble. So what I had was I had Facebook. In Facebook, I was like, red dog reversal the day before. Twitter was very exciting. Maybe this will turn around social. So I took home Facebook. And then I even got suckered, not suckered, but I bought more at the prior day high to see if I can get a day two. And it didn't work. So you look at Facebook, okay, and you had a small red dog reversal right here when it came back above the prior low. I was thinking maybe it could break this little downtrend right there, get above 74.98 or above a prior high, and it only went to 75.24. Went above it, got bigger, then it came below it, and then I got rid of some when it broke back below 75, and then I stopped myself out somewhere, I think around 74 and change, and now I'm not in it. So I'm going to give it some time. Maybe it goes sideways, maybe it gets another chance, but all in all, very choppy still. It's had a long run. It's still kind of in no man's land. On the active trade, a lot of times this stock gets very, very choppy and hard to trade before it does something. It happened here on this descending channel before going again. Happened here. Remember that when everyone thought in the world it was going to break down, then it broke up. And then recently, even here, we were playing it for upside. It broke down, and then it went right to new highs real quick. So this has been a hard day trading stock, to be honest. It's been a nice trending stock. It's been a nice investing stock. It gave you a nice cup and handle pattern right when everyone said, it wasn't going anywhere, and you could look up Scott Redler, Facebook, Jim Cramer. I know a lot of you have thoughts about him one way or another, but this cup and handle pattern, I went over it with him on a show, and even if you didn't accumulate it in there, this pro gap right here was your spot to get in, and you still could have went from 30 to almost 80. So anyway, the question is, what does it do now? At this point, the jury's out. So what else did Red Dog do today? I tried to buy gold. It didn't work. I put together this wedge pattern, and not saying it's over. Most of these wedge patterns have all negated to the downside. Okay, gold has been in a bad, downtrend. Bad. All right, well, this is when it broke 150. Here's when it broke this symmetrical triangle and lost a 200-day, right around 160. And then you had another little symmetrical triangle here, your last point of reference to get out of town around 125. Then it broke a support level that looked very similar to this support level after a symmetrical triangle. So it shows you how patterns repeat themselves, don't they? And then now all the way down here when the world, I'm telling you, the world hates gold now. So sometimes it makes it seem as if, that means something different could happen. And I don't know if something different is going to happen. It might. Jeff Cooper, who I think was really good, he's thinking that maybe this is the time that everyone thinks it continues lower and it doesn't. But I am not going to be a buyer and a holder unless it closes back above this 112 or even 112.76 or even above this. And then if it starts breaking below 111, chances are it can continue down because you go to your weekly chart in gold, and still looks like it's still hovering below this major support. And all in all, it seems as if you could still see something closer to 100. So if it doesn't reclaim this, it doesn't reclaim, or 104-ish. If it doesn't, come on, get off here. If it doesn't reclaim this fast, which people would call an overthrow or an overshoot or a fake out to the downside, that's where it's going. So let's keep an eye on it. So with all that said, there's the statue. You see the Statue of Liberty right there? Okay, that means freedom. Okay, we talked about Veterans Day. Thank a veteran because they work hard for our freedom. A lot of people take it for granted. A lot of people go home after a tough day and, have a chip on their shoulder because they lost money. So that's why we talk about balance. Go home, don't kick the dog. The dog didn't do anything to you. Either did your kid or either did your wife. So try and brush it off. That's why you should be working out. You should be playing chess. You should be doing things on the side in order to clear up your mind and keep you in the right frame of mind. So on bad days, they're not so bad. You don't define yourself by your P&L. Too many traders define themselves by their P&L, and if they do that over and over and over again, it's just like a dog chasing its tail, which you don't want to be. It's a bad visual, right? You don't want to chase your tail. You want to stop. Well, what's that song? Stop. Collaborate and listen. Anyway, did I just quote Vanilla Ice? Anyway, so balance. Just take it easy. The same way, if you had a great day, and some guys have had really good days lately, especially with Apple and that move in Baba, do not just start buying something else and roll your money into a different play, a different option play, and start throwing it out the window. You might as well give it to charity. Think about what you did in order to get that money and how hard it was to find the right vehicle. So don't just go pick another one and burn it in the wind. Not the right thing to do. And tomorrow's Friday, after a long week, and it's almost Thanksgiving next week. One of my favorite holidays. My parents are coming in town. I'm in charge of the turkey. I have a great recipe. If you want to send me your recipe, I'll take a look at it. I probably won't, maybe make a little switches. Scott at t3trading.com or Scott at t3live.com. I have a recipe. I'll even send you mine, but you have to give me, what's the word? No, I don't, you could say it's yours. It's that good. But anyway, Thanksgiving's great. Holidays are great. Then you have Christmas, and, time goes by too fast. So that's why I try and keep a glass half full with a level of common sense and pragmatism, if that's a word. And it seems to be working at times. So tomorrow I'm in Short Hills. I'll be on the radio. There'll be my note will go out. There'll be no long-form video. Laz will probably be doing a shorter one, or maybe Smith in the Black or someone else. And don't lose or make your whole week on a Friday going into the weekend. That's my last piece of advice. Have a good night.